These are the 8 things you do that blows your account when trying to caught reversals. And 4 comes with quick solutions. Number 1. Most of you have these bad habits of expecting price to respect your zone. If it has 1 or 2, retest. And most people even go as far as even marking a demand zone after the second retest and expect price to miraculously reach that point, then start going up. And this is a very, very dangerous stuff you guys do, because at the end of the day, you are going to lose all your money. And if you still think that what is occurring now is a liquidity grab, which is when price liquidates or go past your zone, because there's liquidity there, which is in form of those equal lows there, and you wait for price to retest at that zone there, and plan on buying at that point there, you are still going to lose all your money. So avoid that and the second mistake, because this would blow all your accounts also, which is when you think that price is going to reverse, because it's creating higher highs and higher lows and gives you change of character later. Like, do you really think change of character have any power in the market that you automatically assume price is going to reverse? See, let me brief you on one thing. I don't care if your zone have a supply zone, a breakout block, or something like that. If there is no imbalance or fair value gap above your zone, there is never going to be a reversal. And even if there's going to be a reversal, it is not going to be respected like you want it to be. Like, if you look at this point, there was no reversal because market movers wants to trap you. They want the gamblers to be restless and eager to caught the move down. And most of you will fall for this trap. And what you'll do is you're going to be deceived by that big structure there. Mark that supply zone there, set your stop loss around that point there, and guess what? Still get brutalized, because if the market does not intend on giving you entry, there's nothing you can do. You will still lose your money at the end of the day, which brings us to, what are the 6 more traps you need to avoid, and my solutions to bypass them? Number 1. Pursuing tiny profit trap and solution. Because for real, I don't understand why people pursue fast moves. To me, it's insane. Like, you look at a price action like this, price moving, then gets to that lowest point there, and then started breaking highs, and you automatically want to go in, even with that huge stop loss, because of the fear of missing out, not knowing that's a trap, because to know it's a trap you need to be focused and patient. Main reason why the banks entice you to want to hop in quickly, by making price move very fast. So instead of falling or pursuing price, look deeply at the price action carefully. There was a lot of up and down movement, which is weird because this shows indecisiveness. You don't want to be moving with structure that looks like this. Instead, you want to trade only clear structures and wait for price to respect one of the other, which is that large zone here, which will never make you profitable in the long run. Because this large zone have low risk-reward ratio, instead of going through this back and forth price action, you want to look carefully. And if you look carefully, you can see that there was something like a strong support zone here, which had like a 1, 2, and 3 retest. This is a very good sign. So instead of going through this back and forth price action, you want to wait for price to break out of all this rubbish consolidation that's going on. And then if you want to ride this trade, like swing this trade, then you want to wait for a breakout. After that, you can either enter on that breaker block there, or just go with the support zone, and you'd have gotten a beautiful tiny entry there. It is that simple. Number 2. Lost because of ignorance of past price action. This is when you guys see price liquidate people in the past, and then you still feel like you can just enter the trade like that. Like, how can you see that the price before the reversal entry or signal is bad and still go in? Why are you expecting sugar out of poo? Like, if you look at that point, you can see 1 and 2 retest here, and still most people will be expecting that price will miraculously respect that demand. Like, make that make sense. If you refine it and all that, nothing is going to happen. You are still going to get liquidated. So when stuff like this happen, this is when you know that it looks like the trend is not planning to switch bullish. So you want to, instead of forfeiting this trade, you want to look to enter at the retest of that liquidity point there, or we can call it that support zone there. And if you have done that, you would have been in good profit here, even after losing due to past price action being bad, because you're flexible, which brings us to the third one. Number 3, lost of more profit due to narrow thinking. This third one is a little bit trickish because in this third one, this happens to even the pros. Like instead of having a narrow tunnel-like focus, which is you basically looking at that point there, spotting a liquidation happening there, which is in form of a break or structure, and seeing price pulled back later on and enter at that very big supply zone. You don't want to instead trade another way and broaden your view by changing your overall narrative of how you view this. And to change it, start by looking carefully, and you'll see that there was something like a trend line forming around that point there. So instead of trading with the normal price action, which is supply zone, you want to trade with this trend line. So what you want to do is that you want to wait for price to at least take out 2 of those trend line. And then when it takes it out, you can look for like a support zone that is coming to a resistance zone, or you can look for a flip zone, or a demand zone, or a breaker block. And if you have marked any of that, price would have respected your zone because you broaden your view. Which brings us to the 4th trap. Number 4, entering trades because of their price action is too neat. Like if you look at this price action, it was giving clear price action vibes and all. And most people are going to trade this instead of double checking. Like even if it looks neat, with price creating lower lows and lower highs, you still have to wait for price to liquidate at least one high. Like look at that point here. Most people would have planned on buying at that lowest point here. But if you trade this way at least 10 times, you are going to lose 80% of the time at the end of the day. So to be safe, what you want to wait for is at least price to liquidate those high is either this one here or the other one there. And then when the liquidation have happened, then you can wait for a retest and also pair it with more confirmation, like a fair value gap around your entry also. And you'll have been good instead of risking your money. On the very first entry there, 5. Trading like gamblers rather than combining time for. Firstly, if you see a huge wick spike like that, that's a red flag there. Because that shows 1. Indecisiveness, volatility just entered the market, and that market mover are out for blood and doesn't want you or anyone to make money. That's why they're engineering this back and forth price action. And most people don't know this, so instead, they'll try to enter around that point there and would blow their account. So when you see that the trend or the structure of the market isn't moving in a specific pattern, or it is just taking out highs or lows randomly, the best decision to make here is staying out. Instead of trading it, you want to do something else, like if you see all this kind of progression with no pullback or no deeper pullback, and then eventually you see something like this forming, which is considered a consolidation. This is a very good sign, because it shows you that the market movers are trying to do something in the market. They are trying to dig price downwards, and this is a sign that they are trying to do that. So when you see stuff like this, you want to firstly get your target from the top there. You don't want to really swing it to the lowest level. You just want to cash out quickly before potential reversal. And then call it a day. And then when you have gotten the target, you want to look at the price action that is happening on lower time FRME. If the price action is moving smoothly, then you want to plug in when the trend line is about to close. Like when price is getting to the end of the trend line, as you can see here. Then look for the nearest supply zone. Mark it. And as you can see, you'll have gotten good profits. Well, for number 6, combining everything you've learned so far together and you'll get 87% win rate. Like, subscribe, and click link in description to join my free educational Telegram channel or get VIP